So let's take a look at the markets real quick. So we're trying to find the next fair value area. So we use our market profile. This is a market profile we like to use to find the next fair value area where the market likes to go to. So here we are in between our profile, between our high value and low value area. The market is balanced. So that's a balanced market. And then what happens is when the market gets outside a high value area, it likes to find the next fair value. So the market's always trying to look for the next fair value. So that target right now is 69.22. So from this morning's trades, if you're an early morning trader, I'll show you the trade entries. The breakout was at 69.05. Our target 69.22. And from there, if we break out at 69.22, the next fair value is at 69.38. This is the control point. This is typically what the market will do. It likes to go from the control to control on previous market profile. You can see the control point is the breakdown. Yesterday's control point is the breakdown in low value area today for an imbalanced market. And that should bring us down to the next fair value area of 68.76. So these are targets for the day. But typically on a day-to-day basis, they like to roll from control to control to find the next fair value area so the market can get back into balance again. Okay, so right now we're in an imbalanced market and the market is seeking fair value. So what they do is they'll try to bring it to the next control point. So now we know our targets, where are our entries, and how can we get in? Well, there's a couple ways we like to do it. If you look at the entry this morning, if you're an early morning trader, 7:20 this morning, it's 8:20 an hour ago, that started this whole move up at 69.02. It also consequently broke out of market profile at that 05 level. So 05 was right around, where was it? 69, 05 and a half. $05 and a half right there. So there's your $05 and a half. So you can see we broke out of, it got rejected, market profile got rejected, and then the final broke out. And what I like to do once you break out, you can look for the retest or find your first liquidity grab. Right here's your first pullback liquidity grab. Your stop can be below that swing and try to capture that move, that breakout move. That breakout move was 06 and a quarter. Sorry, this is this one over here. It grabbed liquidity. It broke out to closes above market profile. It had a pullback on a liquidity grab bar. So your fill in this trade was 06 and a quarter. Your stop loss would be below that swing. Couple ticks below the swing. And it's already moved up to 18. It's moved up 12 S&P points just over the last hour because we went into an imbalanced market. So this is an imbalanced market profile trade setup. These yellow triggers are another setup. Here's what happened at 7:20. It got inside of our 30-year back-tested trend filter. It's green. We're looking to buy only. And we had a yellow trigger entry. This will be on your speakers as an indicator. It will beep when this goes off. And that entry was at 69.02 and a quarter. And we've been as high as 69.18. Now, what I'll do at 9:30 for you members, I'm going to walk you through the 5-minute opening range breakout. I'm going to show you how to do a fair value gap with our charts. So I'm going to show you how we like to do that right after the 5-minute opening range on the New York Open today. So at 9:30, I'll pop on there. 9:35, I'll draw it up for you. And what you want to do is you want the fair value area gap or the 5-minute opening range to coincide with our charts. We want to see energy in the direction of our charts. Right now, there's been nothing but buy setups since midnight. You can see our trend filter has been green all morning. So we're only buying. So we're imbalanced. there's your entry right here if you wanted a high value area breakout. And what I like to do, I like to do the same thing. And I'm going to show you how we look at the low volume node trade. Also, I did a video on that. So there's several trades you can take with trend. And we're going to go over that today and this morning. We'll go over all that with you at 9:30 when New York opens up. You have a good hour and a half to trade these couple setups I'm talking about. Our normal setup that the algorithm will pick up are these yellow trigger entries. It gets inside of our trend filter or our buy zone. We get a reversal. You see a continuation that happened this morning at 69.02 1/4, high is 18. Then we broke out of HVA. HVA was right here exactly at 69.05 1/4. Right there. We had a 2 candle close above it, 1, 2. I like to see the intra candle pullback to grab liquidity and close. There's your entry. So you have a small stop. 69.06 1/4 was your entry. The stop is a swing low of 04 3/4. So you can go a tick below it if you want, or 2 ticks, 04 1/2. So your entry was 06 1/4. Stop 04 3/4, 04 1/2. And it's got as high as 69 1/4. So I like these market profile breaks. Here's another one, 69.09. How can I play that as a PP break? 69.08 3/4. There's 08 3/4. So we broke out of 08 3/4. So this is my PP price profile. Let me show you how I like to do it. You break out a price profile here. The exact number was 69.08 3/4. There's your breakout here of price profile. So let me show you the difference between them both. This is how you trade market profile breakouts into an imbalanced market. We'll make this dashed. That's your PP breakout. This is your HVA breakout long, because you're getting imbalanced. So there you had this candle was your long side setup, stop right below. This big liquidity grab. Look what they did. It's a beautiful trade. Absolutely gorgeous trade. You have a 2 candle close outside of my PP. There's my PP. You get a liquidity grab pullback. You close above. It's going to be a little bit larger stop. There's your entry. I do the same thing if it retests market profile. Right there it is. Your stop is below a tick below or 2 ticks below the swing. Or a lot of traders go 50% of the candle to have a smaller stop because it should continue to the upside after liquidity grab comes in. So that's your normal setup, trading outside of market profile and imbalanced market. So what they're going to try to do, they're going to try to find the next imbalanced area, which is a previous market profile. They're going to try to reach it up to 69.22 this morning. What they also can do, we have another trade setup come up. We'll try a retest. It's called a break retest. Let me see this trade come up. Also, the next step, it comes down to the PP, hits it. I want to pull into the market, watch for liquidity grab, and pull in right there also. So those are the type of setups you have. We also have the 5-minute opening range on how to find a fair value gap on an opening range. I'll show you how to do that entry after the first 5 minutes after the open. That matches up with the charts that we have. So if you look at the entries that you can take, these are entries. Here's our yellow trigger entry. This is the 1/135 I show. That's a 35 tick reversal. You don't have to do a 1/35 if you don't want to. You can bring it lower to get a smaller stop. But that's our normal trigger entry. Another entry we can do is the low volume node. I have these on here, these daily profile levels. A low volume node entry. What you want to do is find the lowest volume of the bell curve since midnight. Here it is. Right there's your lowest volume. I did a whole video on this for about 30 minutes. You guys can review it. Right there's your low volume node. We'll leave that up. Another trade signal for us with trend. I only like to take low volume nodes with trend only. If 30-year trend filler's up, I'm taking low volume node breakouts, retests. Put this in as blue. This is a low volume node off the bell curve. Check it out. It's exactly when you broke through market profile. So this one, you broke out a market profile, gave you a little bit of edge earlier. Right there's your low volume node breakout. 1 candle, 2 candle. You want to see a pullback intra candle and then close. Your stop will right below that low. That's a low volume node entry. Your stop 2 ticks. Some of you like to do 1 tick below. That's fine. There's your stop on that one. So this is a low volume node entry. Entry was 69.07 and a quarter. As high as 18. This is a market profile HVA breakout entry. Entry was 69.06 and a quarter. High as 18. This was a price profile breakout entry. 69.11 and a half. High as 18 and a half. This is our normal trigger entry, a yellow trigger entry inside my trade zone. It won't trade a yellow trigger. Then your speakers won't go off unless you get inside of the zone. The same thing can happen inside of our buy zone down here. And that was in 02. So you had 1, 2, 3, 4 solid entries, all with trend as the market tries to find fair value area up to this next. It's trying to find value at 69.22. That's our target. Once it breaks out at 22, we'll look for a break of that 22 retest, and we're going to look for a 38. This is where it should go. It should come up to the next control point today. That's a previous control. That's where they try to find value. Here they're trying to reach value up to 69.22 since we broke out of an imbalanced market. All right, so here's our yellow trigger entry with 30-year trend. Remember, 30-year trend, you want to stick with it. This is very simple. Here's our breakout of HVA, high value area, 2 candle close. Wait for the liquidity grab below and close above. There's our low volume node on market profile. 2 candle close above it. Close back. I went back below intrabar, closed above it. They captured the traders. They captured liquidity. And then we just got a close above, 2 candle close above my price profile, 08 and a quarter. Had a big liquidity grab entry. They tried to trap all those traders. They got them. They got all those counter trend traders. They trapped them. Look how deep that liquidity grab area is. So you can see using a Renko chart, an Uni Renko chart, I can see when they're trying to capture liquidity at these big inflection points. Here's a big inflection point. HVA break, big inflection point to trade. Low volume node, big area to trade, 2 candle close. Got to have a pullback and then close. And then another one, close above my my price profile, another big entry. 1, 2, 3, 4 entry. The 5th type of entry that we'll look at is the opening range after New York opens up in 5 minutes. I'll go over that with you traders, exactly how to trade that on fair value gap. What the market likes to do all day long, it tries to find fair value. That's what it's trying to do over here in the market profile. That's why these are trades. It gets imbalanced, breaks out of the daily market profile, HV and LVA, and then it's imbalanced. It's trying to find a new balanced area. It's trying to find fair value. And as it's doing that, we can buy these breakouts with liquidity grabs. Okay, we can also look for the low volume on the bell curve like this and trade off this low bell curve. And so if we come down here, intra candle, here we another trade setup. I'll look for another trade setup here. And I'll look for another trade setup here if we come down to it for a reversal. So we'll be looking for a trade setup if that comes down at that level. Okay. So I'll pop back on here at 9:30. We'll go over the 5-minute opening range. We'll go over that together, and I'll show you exactly what we want to do with that also. That is valid all day. You want to trade off those levels. And I'm going to show you what a fair value gap is, how you can trade it. That's what the market tries to do. It tries to find fair value all day long, and it works really great with our algorithm. when they match up, I'll show you how they match up like these. These are all match up trades. Their algorithm, buy. There's an HVA breakout buy, low volume node buy, PP buy. We're having a retest of a PP buy coming up with a low volume node also coming up. All right. Any questions, let me know. I'll be back here at 9:30. Pop on the mic. We'll go over the opening range together as the market progresses. I'll go over the trade with you guys live here this morning.